we get price targets of 500,000 plus. So even if I discount me for being a moron by 50%, you still get 250 grand. So that's kind of the spread to me, 150, 250. But obviously, who the hell knows? There's a lot of activity, a lot of repositioning. Net flows have been offset really by GBTC as people are unwinding the arbitrage and stuff like that. So I don't think you need to read much into it. It probably has to digest. Don't forget, you've brought forward a lot of demand. Net, what will we brought forward? $2-3 billion of demand.
Raoul Pal, co-founder and CEO of Real Vision, discusses various topics, including the Bitcoin ETF, his everything code thesis, the macroeconomic environment, and additional insights. With the launch of 11 spot Bitcoin ETFs last week, the question is whether Bitcoin will follow its historical pattern and sell off again. So far, it could be looking better for Bitcoin investors. The cryptocurrency has declined by about 9% since the spot Bitcoin ETFs began trading last Thursday. Raoul Pal stated that he assigns a 60% probability to the notion that the current cycle is relatively standard. In this scenario, he envisions the price reaching $150,000. Bitcoin exchange-traded funds have attracted nearly $900 million in the initial 3 days of trading, as investors cautiously embrace these new stock market instruments that mirror cryptocurrency performance. BlackRock, the world's largest asset manager, led with inflows totaling $723 million, followed by Fidelity with $545 million. The positive inflows were countered by Grayscale, which experienced outflows of $1.18 billion. Grayscale converted its existing $28 billion of Bitcoin funds into an ETF alongside introducing the new funds. Pal believes that the influx of capital through passive flows from 401k investors will contribute to lower volatility in Bitcoin, even though the crypto market as a whole may still retain its Wild West character with diverse capital flows. Let's now delve into the video to explore more. But before we begin, consider subscribing to the channel and hitting the bell icon to stay updated with the latest content.
I'm giving a 60% probability this is a relatively normal cycle, in which case it would get to 150,000, let's say. I'm giving a 20% chance that it's actually a front-loaded cycle because of the ETF and other stuff, that maybe it gets to that 150 faster and then fades, which will be kind of pain for a lot of people who expect it to go into 2025, right? And then the other 20% chance, I think, is that this ends up being a bubble cycle. And so it looks more like 2011, 12, 13 than it does the previous one. And in which case, if you remember that cycle, it had an interim top correction. Everyone thought it was over, and then it just exploded again. I think there's a decent chance of that. But we need to see the contextualization of how the ETF flows impact, what's happening with monetary policy, what's going on in the economy, how the election's going to play into this. So that's how I'm thinking of it. That upside crazy bubble target, using that kind of everything code structure that I've talked about in the past, we get price targets of 500,000 plus. So even if I discount me for being a moron by 50%, you still get 250 grand. So that's kind of the spread to me, 150, 250. But obviously, who the hell knows? So if you think about the biggest buyers of this stuff, is actually the millennial cohort. What the millennials do really well is they invest in their 401ks every month, and they can put this in their 401ks. So that's sticky. That's why ARK didn't get all the redemptions when it went down 75%. It's because it's millennials who own it, and they put it in their 401k, and they're in it for the long ride. So I think it's the boomer crowd who'll be more concerned about the volatility. I think that's a very good thing. There's going to be a lot of people putting it as a long-term asset, buy and hold, and that should give it the stability that you need, that you don't just get massive washouts from people panicking the moment it goes down. And I think most of the ETF providers have made it pretty clear that it's a volatile asset and it's a buy and hold asset. I think as assets mature, they become less volatile. So I think we need to expect that. And particularly from passive flows of 401k investors putting it in every 2 weeks, every month, that'll keep a bid that didn't exist before. So I think, yes, we'll probably see lower volatility, but we'll also be feeding capital into crypto land. And crypto land's not just the state of Bitcoin, it's a whole bunch of other places that are going to see capital flows. So the Wild West will still exist, but the big daddy becomes less volatile, which yes, it's a shame because we can't make as much money out of each cycle. But if our underlying philosophy is we want the adoption of this technology to be broad and deep, it has to go that way. So it's kind of good from that philosophical angle of trying to change the world, bad from the ridiculousness of the cycles and how profitable they can be if you get them right.
According to Raoul, navigating the cryptocurrency landscape is challenging. He acknowledges the difficulty, particularly after the second cycle, emphasizing the resilience of projects like Solana during tough times. The crypto market cap has declined more than 1% to $1.68 trillion as altcoins pared back gains in the last few days. The Bitcoin price chart looks weak, with a complete lack of trading volume. Top altcoins, including Ethereum, are losing support level, with Ether price trading 2% lower at $2,520. Solana's price holds ground near $100. Regarding whether the crypto space will be a winner-takes-all scenario, Raoul remains uncertain. He believes that different blockchain platforms will serve different purposes, and while a few might dominate, it's unlikely to be a monopoly. Now, let's redirect our attention to a video.
It's bloody hard, right? So it's fine when you get through the second cycle. That's why, I'm very overweight Solana because I could see it survive the worst nuclear winter. And the developers were very active. The community was very active. And then they made some big tech breakthroughs with being able to mint 1 million NFTs for $100. And then Fire Dancer, which kind of changes the entire game again in terms of speed and cost. So I think that's why I've backed that horse, and still having Bitcoin and still having Ethereum. And then there's a bunch of new stuff, out of Sui and Sei and Polygon, and there's just so many things. And the answer is I don't know. It's difficult. That's one of the reasons I set up the asset management business. I've got Exponential Age Asset Management, was because this bit is difficult. It's easy to own the top 3 or 4 and not fuck it up. It's very difficult to choose the winners unless you're in it all day, understanding everything. And so the idea I had was to start an asset management business that just invests in crypto hedge funds. So it's a fund of funds. So they actually are doing the work to find that, because otherwise it's actually really difficult to do. Again, we've all got proof in our wallets that we thought we were onto the next big thing and it wasn't. But in terms of, is it a winner takes all? I just think we can't tell. I doubt it. I think different chains will be used for different things, but it will probably end up being a total of 5, take 80% of the market. XRP is another one. It has use. There's plenty of use, but it's not the best performing asset. It's a blockchain that gets used. There's a bunch of others with big market caps that aren't used at all, just for fun. I mean, you could use Doge. Elon may use Doge for payment systems or whatever, some way, shape or form. But Doge's got huge market cap, just driven by retail investors. It's bananas, but this is the space we're in.
Recently, crypto prices were in positive territory, but stayed near the flat line as the investors' risk bet appetite is fading. Meanwhile, the investors are assessing the market's future potential before making any further bets on the market. In addition, the regulatory concerns could have also dampened the sentiment of the traders in recent days. Although the SEC's approval of spot Bitcoin ETF marks a significant win for the crypto community, regulatory concerns still loom in the global digital asset space. Your input is valuable. Share your thoughts in the comments. If you found this content helpful, give it a thumbs up, and remember to subscribe to stay updated. Thank you for being a part of this journey with us.